Hey everyone, Justin Williams here, Justin Williams 10X. Thanks so much for tuning into the channel. If you're loving the content, as always, please like, subscribe, smash the likes, and please share the video. This video is all about how we're able to diversify our investments in these volatile times. So how can we make money in such a volatile market? I get it. We've all been through the last while here. Market down, tons of fear. If you're in stocks, it's been a ride. If you're in crypto, it has also been a crazy ride. And if you're in real estate, there's just so much fear out there. I know in some markets it's down, in some markets it's kind of steady, but it's definitely filled with quite a bit of fear. And you may be sitting there going, what the heck am I supposed to do? How am I going to make money in these times? And what direction should I go? Now, I am not a financial advisor, and this is not financial advice. This is just my perspective. It's what I'm doing, and you can do whatever you want. I believe in the power of DCA. I believe in the power of buying when people are fearful, and I am permanently bullish. I just believe that if all of humanity was not optimistic, we'd already be extinct. We've been gone a long time ago. So humans are naturally optimistic. Okay? Our population is continuing to rise. I know that there are a lot of reports. That's another big fear, it's a big FUD, is currently our population is still going up. Especially if you live in America, the population is going up. Where we live is powered by immigration. So there is just the giant Ponzi scheme of real estate because we just keep bringing more people in, and more people come in means there's this continuous demand on the real estate market. I also was reading an amazing article by Arthur Hayes. Highly suggest him, really cool guy to take a look at. Go Google him. And just on the dynamics of money transfer, how American dollars are being spent in Asia for cheap production of goods. Those places have a lot of capital control, so there's not a lot of foreign investment that goes into their marketplaces, and therefore they are left with a ton of US dollars. Their governments don't want inflation of their assets because that keeps the prices low so they can keep making everything for us on the cheap. And all of a sudden, here's America loves outside capital flowing into it. So the money's got to flow somewhere. Money flows in, assets go up. So when I take all of those thoughts into mind, and I look at money's going to keep flowing in. Money is really just sitting on the sidelines right now in cash, but at some point it's going to get deployed. And I look out and look at a long time horizon, appreciating assets are going to go up. So how do we prepare in such a volatile market? We continue to invest. We have to make sure that we are very cautious. Be sure if you're leveraged in any way that you can handle the payments that you need to make on that leverage, even if interest rates continue to go up. My prediction, we're closer to the top on interest rates than we are on the bottom. So longer term, I think that the interest rates are gonna roll over. I think that then they're gonna start coming down, and then you're gonna see the market coming back up. We've already seen a massive push on risk on assets the whole beginning of this year. I think that play is probably a little bit played out. It's probably gonna roll over a bit, but I would just continue to DCA into the market. I would look for diversity in your asset holdings as well. I'm a pretty big real estate guy. I still believe in real estate in my jurisdiction. I'm in Western Canada, and such strong population demographic demand. That's how the Canadian government's gonna pay for all the debt that they saddled us with during the pandemic. Similar is happening in all Western countries. So you should consider that, just that demographic play. But you, of course, always need to think on real estate about your micro market. So, it's not the same investing in New York or Los Angeles as it is Wichita or, Boulder, Colorado. You need to be thinking about your very local market. On the stock market side of things, long-term horizon, if you're not willing to watch it constantly every single day, definitely go towards low-cost ETFs, DCA. You're going to outperform 90% of what's out there. If you like getting on the risk curve, get out, take a look at crypto. Its performance has been fantastic against all other assets when you look at things like Sharpe ratios and the like. But there's so much opportunity for you if you continue to be bullish. At the end of the day, over the long time horizon, markets have trended up, assets have trended up. So you don't want to be stuck in that situation where you're on the sidelines for years and years and years waiting for the crash, because you just never know. You might just get sidelined and left on the side. I've got a lot of friends that have been waiting for the real estate downturn for 15 to 20 years, waiting for the downturn, waiting for the entry. I think it was Meet Kevin, good shout out to Meet Kevin, that said, real estate, buy and wait, don't wait to buy. And when it comes to the stock market, it's time in the market, not timing the market. Be patient, wait. Your investments aren't going to pay dividends to you in a moment's notice. It takes time and it takes commitment to your thesis and to your ideas. Also, focus on how you can earn money. Too many people are focused on, I'm going to get rich through my assets. Yes, hopefully you will. You can buy appreciating assets over time, they go up. But at the end of the day, if you're working, I work too, you can do what you have to try to increase your earning power. Because as your earning power goes up, if you can maintain the same lifestyle, now you can save that much more percentage of your income, and that can go towards your assets and your asset allocation to increase your overall net worth. If you're loving the content, please share the video, like and subscribe, and also make sure to check out my video on real estate investing. It's going to help you get started, and you're going to see what you can do to build your net worth via that. Again, I'm not a financial advisor. This is not financial advice. It's just what I'm doing. I've been DCAing heavily into the market during this downturn. I got caught with my pants down a little bit too, definitely. I was watching my portfolio go down. I was right there with you. I get it. We were all there. Oh my God. The moments you didn't want to open it up. But sometimes you got to plug your nose and you just got to keep it on with your strategy. My strategy is very simple. I believe financial assets are going to continue to appreciate. I think long-term, we're going to continue to see lower interest rates. This is very long-term. We're going to see lower interest rates. And we've actually gone through the worst of it, and we're going to continue to go up. Now, it's going to be volatile the next while. You have to, be ready for that. But that volatility is an amazing opportunity to buy things at great prices. And I would focus on great companies, or again, low-cost ETFs that track the total market, that you don't need to be thinking about exact picks. That's where I would put your efforts if you're not, a day trader yourself, watching it every single minute, and focus on what you can do to reduce your expenses, reduce your exposure, so that more of your income can go towards building those assets for yourself, and you can have an amazing future looking forward. Patience pays. Take that. Thanks so much for watching. I appreciate it.